Hi, welcome to Market Alert for Friday, 1st of November 2019. So starting off with Bitcoin, price is trading near make or break levels. So let's have a look at this. The market hasn't done much since nearly a week when we had the news of China looking at taking on cryptocurrencies, in particular Bitcoin. Market trading above the 200 MA, and then the market's made lower highs all of this week from Monday, but finding support yesterday at the 200 MA. The critical level that they're talking about in the article is the 9,200 level, and obviously the 9,000, but for me the 200 MA is the key, because you can see once it broke it on previous occasions, the market then moved lower. So in the 4 hour, you can see this defined range. In fact, it's got smaller as the week's gone on. It started out with a bit more volatility on Monday and Tuesday, but then as the week's gone on, it's become a bit narrower in range. However, the good news is the market's still above the 200 MA, back below the 20, but finding support at the 50 there. And yesterday in the 15-minute, a bit of volatility actually. You can see we were already below the 200 MA, which we discussed yesterday. And then we've got resistance at the 50, the 20 below the 50 there. And we see the selling coming into the market, with the market then reversing with the potential buy signal at Wednesday's low, and then moving higher. You can see the resistance in this area here with the sell bars. You've got selling pressure followed by two upthrusts there. Potential weakness is the word I was looking for. And to drive through the 200 MA, of course, you need buying volume. And let me just clear those other arrows. And there you can see you've got it coming straight in there. But there was no follow through after this. This was just a matter of moving prices to the previous day's high. And then we see prices trading all the way back down to the 200 MA before the end of the session. On the overnight, the market has taken this out and then traded down, and is now finding resistance at the 200 MA, which is why it's important to have an eye on the daily chart and the 200 MA in this one, and also of course the 4 hour, which is just a little bit further away here. Meanwhile, in the stock markets, as I said yesterday, expect the markets to look weak. There's nothing to really keep these markets on the highs, and we're due for a correction, which I'll come to in just a moment about predicting this. So yesterday we see stocks slump, gold jumps on Powell pause, meaning that he's not going to increase interest rates going forward. Trade turmoil and dismal data. And speaking of dismal data today, of course, we've got the non-farm payroll figures. These are the big one today. That's what the market's going to be waiting for, and have no doubts they've got to come out higher than 90. It seems an awful big distance from prediction from the 136 to 90. So if it comes out anything greater than 90, it will give the market the impetus. It's very easy to throw in a low figure. The figures can come out less than the previous as well. Let's say they came out at 100,000. It still beats the 90. So it's mind games that they're playing with regards to these figures. And then, there's one or two other things, ISM and whatever. But the main event today is the non-farm payroll figures. So watch out for these at 12:30. And while I'm thinking about it, next week everything reverts back to normal. The US will go off daylight savings, as they call it, this weekend. So starting off with the daily chart, you can see prices down yesterday. A bit of selling around. First test bar that we've seen for a while. Market trying to move back to the upside. Not a problem. Let's see how much strength you've got. So from the high of this bar to the low of yesterday's bar, we draw in 76%, and let's see if the market can get to this level. 27,191 is what we're looking at, but that's all going to be dependent upon the non-farm payroll figures. Meanwhile, yesterday you can see the market below The 200 MA got through this yesterday morning at around 9 a.m. The market then traded back up to the 200 and the daily pivot, already on the short side, and then this was exacerbated as the market opened and prices traded down sharply 200 points before bouncing back to the 200 MA, pulling back, going through the low of Wednesday, but then not holding and down for a double bottom. And in fact, we ended up with a triple bottom yesterday as the market then traded sideways, staying below the 50 bar moving average until the plunge protection team did their usual trick of coming into the market and bringing it back 100 points before the close. And then overnight you can see that they've moved the futures on the electronic market above the 200 and DP level, and price is now trading in a range and will no doubt work its way back for lunchtime, ready for the non-farm payroll figures. Meanwhile, in the pound, this still moving higher as we spoke about yesterday, because we're heading for a general election. It's bringing stability to the pound. The long side is the best side, and in fact this is the sort of picture that we're looking at in the Dow as well, that same 76%. Measure the momentum back to the upside. If the market can't get to the recent high that you see to the left, then it's likely to stop at the 76% retracement, which is why the sell signals yesterday failed in the pound, because as I said yesterday, it's good news for the pound that we're having a general election. It might not be good for some politicians, but it's good for the pound. It brings that stability. So that's why the pound, at the moment, the best side is the buy side for the pound. Unless Boris resigns or something bizarre. Well, wouldn't be bizarre these days, would it? Happens politically. Then the pound is on the buy side. So pullbacks and the buy side for the pound. Now, I don't have any implied volatility for you today because they've changed the site and they are no longer offering the free figures from what I can see. So I'm going to have to write to them and find out what's going on. Otherwise, I'm going to get behind on the data. I don't mind paying for it. I just need to know what the figures are and how to actually get them. So that will resume on Monday. A bit of a pain, but hey ho, I can't do anything about it. So there's no point in whinging. It's out of my control. Meanwhile, Deutsche Bank still being funded by the repos, no doubt, trying to move back yesterday. Still down though, and heading towards the 640 level there. And 10-year yield, this at 0.15. So still normal market for the 2 and 10-year curve at the moment. Let's just bring that back. There you go. So yeah, 0.15. Okay, that will do for this one. I'll go and get sorted with regards to the implied volatility, and let's see what the non-farm payroll figures are at lunchtime. But otherwise, have a great day and a great weekend, and I will see you on Monday. As ever, thanks for watching. See you in the next one.